Hey, welcome guys, welcome for another live stream today. I hope you're doing well. I hope you're having a good week. Happy Tuesday. Good morning, good afternoon, wherever you guys are based in. Let's see, who do we have here? Can you guys see the comments popping up? Let's see. Good morning. We have Ben Builder here. Good morning, Ben. I think my comments are not popping up. Good afternoon, good morning. Okay, just give me a second, guys. We love technical difficulties, right? It always happens. When you least need it, this is where technical difficulties happen. Let's see now if... Can you see the comments popping up? I don't think you can, right? Good day. Good day, Bent. Okay, just a second. I'll have to do something here because I want to see the chat all the time. But okay, can you now see the comments popping up? I hope you can. Nope. That would be sad if you can't guys see the comments popping up on the screen. Okay, you can see that, great. Okay, some good news here. Okay, so let's make a start. Today the topic is about the war, hottest topic nowadays, Bitcoin's chart. I'm going to show you some very important bearish signal on the chart, and based on that we are going to discuss where we are heading. We'll talk about the altcoins, and in between we are going to have some Q&A session. So if you probably followed the news, you would have heard what happened yesterday. The US said talks happened for peace. We won't hit. That was what US said. Iran on the other side said no talks happened. We won't stop. So either somebody is lying here or someone is playing a much bigger game. And all of this, while all of this is happening and taking place, we saw insiders making over $100 million in a single day. Here we are not talking about weeks, not months, just hours. So the real question is, are we watching a war or a setup? And this will be part of our discussion today. Okay, we have Bent, we have a couple of people, great. I will just make a start slowly as more people are coming in. Right, so we got two completely opposite narratives. The US pushing the idea that peace talks happened, Iran straight up denying it and saying that it's fake news. Iran is now accusing the US of faking peace headlines to manipulate oil markets and financial markets, and I'm going to share with you another chart over here just to see what kind of manipulation we are talking about. I brought all the charts in one place so you can see it visually. So think about this in a second. If you can control the headline, you can control the price. If you can control the price, you can control the money flow. Whether that's good or bad, everyone would have a different perception. Probably if you're on the winning side, you would be happy. But if you're on the losing side and you're not an insider, that would be sad for you, right? Reports are circulating that insiders, as I said, made over $100 million trading. Maybe remove the... Cool. Let's remove the highlighted comments. Okay, I'll try and do that. How? We had, so basically what we saw was leak peace talks. Oil dropped. You can see the oil candle over here from 100 to $80. Risk assets pumped. You can see these huge candles. That's just the hourly chart. For 1 hour, we saw massive spikes. Smart money positioned very well in advance. And what happened? After that, we kind of see again tension rises and markets started going into a consolidation range. And us retail investors, we get trapped in the middle. This is the same pattern that we keep seeing over and over again. This is just how power works. Now, what is happening on the ground? The Iran is now setting conditions to stop. The US must pay reparations and the US must admit aggression. The Iran is saying we are not backing down. We are not going to stop. And at the same time, we see the situation getting even worse. There are talks about nuclear war. And now also we have the Middle East, in particular Saudi Arabia and UAE being pulled in. If we look at the reports, they say that Gulf countries are getting more aggressive. Saudi Arabia may allow US forces to use their King Fahd air base, and Mohammed bin Salman is close to joining the war. If this happens, you know what that means. It means a regional conflict, something very huge. If we zoom out for a second, here we're not talking just about the war itself. We're talking about oil control, global power, and financial positioning. Because with every conflict happening right now, we see oil prices being affected, inflation being affected, interest rates being impacted, crypto, stocks, commodities, everything. So, in a nutshell, what I'm trying to say is that everything is connected. If oil spikes, inflation goes up. Central banks stay aggressive, risk assets struggle. If oil drops, even on fake peace news, markets rally, liquidity flows back in. So every headline right now, we see crypto moving behind the scenes, money moving behind the scenes. Now, Bitcoin and altcoins are obviously reacting to all of this, to the liquidity, to the risk sentiment, the global fear versus confidence. And this is being heavily used to manipulate the markets. We see fake dips followed by very aggressive reversals. And that's not good. We can see price being manipulated in the short term, but we have some important indicators that I'm getting into in a minute to show you that they are not lying. They're showing what's happening beneath the surface. So who is lying? Honestly, both sides, I think, are playing their own games. And the worst part is that we see other countries being pulled in. So whether that's gonna stop or will become something bigger, nobody knows. We are just going to see. Now, before I move on to the charts and we get into the technical, let's see who else we've got here. Hey, good morning. Good morning, good afternoon, everyone. Okay, we talked about the war, the charts. Really, we don't know what's going to happen next. But this is the data so far. This is where things look like they're heading. More countries, especially in the Gulf region, have been pulled in. Now, fake news, whatever, it doesn't matter. Because the chart is showing us something different. Let's see if I can pull the chart now. I'll use simply Bitcoin's chart at this stage. Morning. I'll just remove the comments for a moment. So before we do anything else, we need to look at Bitcoin's chart, because if you're holding Bitcoin, if you are thinking about buying Bitcoin right now, what I'm going to show you is something very important that you need to know, you need to understand. A specific signal that was just fired on Bitcoin's chart. And every time this signal occurred, it signaled one thing. It preceded a massive, painful price drop. Not once, not twice, unfortunately, every single time. And we just saw this now happening again. Now, you have to know that these patterns, these charts, these technical indicators, they don't predict the future. Past performance is not guaranteed of future results. But when we have this kind of repetitive signal, this kind of track record, we don't have to ignore it. We need to study it. And that's exactly where I'm coming to now. What I'm talking is the MACD histogram that you see over here on the bottom. It might sound a little bit scary, but it's a very simple indicator. And more specifically, what is it telling us about Bitcoin? Let's go back to October 2025 over here, when we had the peak. Bitcoin was skyrocketing. Bulls were so euphoric. Everyone was talking about new all-time highs. But then Bitcoin did something very few people saw coming. It hit a record of above 126k. That was the peak over here. And since that peak, Bitcoin price action has been a little bit complicated and mainly to the downside. There have been rallies, of course, small rallies that you can see on the chart. There have been crashes. But also there have been moments where it looked like the bulls were taking over, taking back the control, just to get crushed once again. And through all of that, through every twist, every turn, every surge, every sell-off, this indicator was always showing us where we were heading before the moves actually appeared. Now, I want to tell you why it's so powerful. It's not about the technical indicator by itself here. It's also about patterns. It is about history. It is about understanding the language that markets speak, because markets do speak. They're not quiet. We just need to listen, of course. And we see the MACD spoken to us twice. Both times, Bitcoin dropped hard. And we're coming to the third time now that I will tell you about shortly. Is this time different? I'll let you think about this while I'm explaining the MACD indicator and what it is signaling. And you can tell me after that. The honest answer from my side is that we don't actually know for certain. But what we can do right now is look at the evidence, examine what happened before, understand the mechanics behind the signal, and obviously surround ourselves with the knowledge that we need to make informed decisions rather than emotional ones. Now the MACD, this is what you see here on the lower part of the chart. It stands for Moving Average Convergence Divergence. Maybe it sounds complicated, but it isn't. It has three main pieces that it is made of. The MACD line, which is the blue line you see over here. That's the first thing you need to understand. And that MACD line, before we go into that, you need to understand what moving average is. A moving average is simply the average of price that an asset has over a specific period of time, whether that's days, weeks, whatever. So that's the moving average, the price of an asset over a specific period of time. Now, if we go to a 12-day moving average, that is the average Bitcoin price over the last 12 days. A 26-day moving average would be the average price of Bitcoin over the last 26 days. Now, the MACD, the blue line that you see over here, is basically, it uses the exponential moving average rather than the normal moving average. And the key difference is that the regular moving average, the exponential moving average actually gives more weight to recent price rather than dragging data from weeks ago, which does the regular moving average. And this blue line here is calculated by taking the 12-day moving average, exponential moving average, and subtracting the 26-day EMA. So when the 12-day moving average is above the 26-day EMA, it suggests upward momentum. The market has been moving up. When the 12-day EMA is below the 26-day EMA, it suggests downward momentum. The market has been dropping. Simple as that. We're not going to dive deep into this because it's not so important for us as investors. It's more important to the actual traders. So that's number one, the blue line. As I said, it's made by subtracting 12 from 26, the EMA. The second part that you see on this chart is the orange line. That's called signal line. And that's the 9-day EMA of the MACD line itself. Why we don't leave it just with one line? Because sometimes one line can be choppy and jumpy. We need two lines. But let's not overcomplicate this at this stage. So when the MACD line, which is the blue line, crosses above the orange line, which is the signal line, that's generally a bullish sign. That's all you need to know. And when the MACD line crosses below the signal line, blue line going below the orange line, that's generally seen as a bearish signal. And just to briefly mention, the third component of this indicator is the bars that you see over here. The histogram is the visual representation of the gap between the blue line and the orange line. So when the MACD line, the blue line, is above the signal line, the orange line, the histogram shows positive bars, the green bars. When it's the other way around, we see the red bars. We'll leave it here. So right now, if we go to the price chart, Bitcoin's daily chart, this is the Bitcoin's daily chart that I've got over here. It's crossing, and I forgot to mention the dashed line is your zero line. That's also important component. We see Bitcoin sitting at a very critical level over here. And historically, when that has happened before, we've seen massive sell-off. And this is where I'm slowly getting to right now. Now, if we just follow the timeline, because it's important, we go back to the all-time high, back in October 2025. The first bearish histogram cross signal appeared on 3rd of November. I've marked those lines for you to follow easily. 3rd of November, we see it's something called a bearish cross. I forgot to mention that you have a bearish cross when you have the MACD line falling below the signal line. As you can see, a couple of examples over here. And bullish cross is when you see the MACD line, the blue line, going above the orange, which is your signal line. Now, if we go through the timeline, the first bearish sign came on 3rd of November. At that time, Bitcoin was sitting at around 106,000 over here, 3rd of November. And many people at that time, bulls were confident that we're probably going to see another all-time high because we just came off from the all-time high back in October. People were expected for price to consolidate for some time and then move to the upside. But instead, what we saw, the MACD histogram formed this signal over here, the bearish cross, where the MACD line came underneath the signal line. And then it also came below the zero line that you see over here, the dashed line. That was the first. And then what followed? We saw a very massive sharp decline happening of 24% for Bitcoin. That's the first signal. Then over the next several weeks, we saw Bitcoin moving. So basically Bitcoin dropped to 80,000, just to put it as a number, from 106 to 80 in just 3 weeks time, decline of 24% roughly. If somebody bought, let's say, worth of Bitcoin for $10,000 worth of Bitcoin, at that cross they would have been looking roughly at 7,600 just in 3 weeks later. Now, was the drop caused by this? by the MACD indicator? Definitely not. Markets are driven by supply and demand, by macro events, by institutional flows, and by millions of others indicators. The MACD histogram does reflect the underlying change in momentum, which is what is important for us and for any investor and trader. It's measuring what's already beneath the surface. And in that case, it was reflected that the sellers were gaining the upper hand here. And after that, we saw the drop to $80,000. And after that, after this drop, something interesting happened. We saw a small bounce back, some consolidation. We saw Bitcoin going back to $97,000. A lot of people now are thinking, bulls got excited again. Now they are thinking, was this correction over? Was it time to buy the dip? Is that the end? Now we are entering a new phase of bull run, and so on. But this bounce were very weak. I'm talking about this range over here after the first drop. Was short-lived, and it was a dead cat bounce, how we call it. A temporary recovery that lacked real follow-through. Then what happened? We saw bearish cross number 2 over here on January 20th, as you can see over here. Then we saw this bearish cross again for a second time, after which we again dropped below the zero line over here. Bitcoin at that time was trading around $90,000. And once again, the market dropped very hard after this cross appeared. The market dropped even harder this time, by around 33%. Then, by February 6th, only 16 days, around 16 days later, 2 weeks later, Bitcoin plummeted to nearly 60,000, as you can see over here. That's approximately, as I said, 33% in 16 days. Again, was that because of the MACD indicator? No, definitely no. There were macro factors at play, there were global events, there were all kinds of things happening in the world and in the market. But the signal, the MACD histogram bearish cross and going below zero, once again served as an early warning that bearish momentum was building beneath the surface, although we had the small pump. Now I'm getting to the most interesting part here. In the meantime, let's see. Before we continue, hi Sarah, hi Cryptopania, welcome. Great analysis. Thank you. You've not seen the interesting part yet and where we are heading. Just wait for it. Okay, now we are moving to the third part, which is where we are sitting right now. So after that second crash we saw, Bitcoin flipped bullish again for some time. We saw some kind of upside momentum to the 75k. It was a little bit disappointing because it seemed like the upside was capped at 75k. A few times we tried to break above it. We failed to break above the 75k. 2 bearish crosses, 2 major sell-offs that we saw. 2 major sell-offs, then we saw 2 bullish crosses on the downside, 2 disappointing bounces over here, and now here. The bears have been firmly in control. Every attempt by the bulls to reclaim momentum has been met with sellers stepping back in and pushing prices lower. This is what we see. Now, the current day, let me just drag this across, 23rd, today is 24th, but we're talking here about 23rd, even if you wish 24th of March, we are seeing the same thing. The MACD histogram is starting to cross below zero, and at the same time, we see the bearish crossover happening. That would be the third time. And Bitcoin is currently trading around 71K. Now, the question here is, do you think that this time is different? The question, I'm coming back to my question at the start before we continue the analysis. Do you think this time is different? Or again, we're gonna follow the same pattern that we've seen before and have another drop for Bitcoin? If we have another drop, that's probably gonna bring us down to, let's be a little bit more moderate this time. If we take the average of these two drops, because the first one was around 24, the second was around 33, so somewhere in between would be, let's put it as 28. That would bring us down to 50K. Bitcoin sitting at 50K over the next couple of weeks. What do you guys think? Does this look realistic to you or no? Bitcoin at BTC at 50K coming. Do you think that's gonna happen? Let's see what people think. Hi Sam, welcome. Hey CSB, welcome. I don't know if you guys caught all the analysis from the start. If not, please watch the replay, because because I think this is important indicator for you to learn and understand, because it's not only signaling what we see here, but also it is showing the momentum that is being built under the surface that you don't see immediately. Looks very realistic, also desirable, really. Somebody has some cash on the side and wants to buy, right? Great. Yeah, I mean, you would have, if Bitcoin drops by another 28, 30%, obviously altcoins would be so cheap to buy. And even Bitcoin, this would be a very good opportunity to buy some Bitcoin as well. So whether that's possible or no, the indicator is showing us that it's coming up sooner than we think. On the other side, we see Bitcoin has been showing a lot of resilience recently, and I'm sure that you would agree with me. There have been external factors like geopolitical events that have put unusual pressure on global markets. We see that everywhere. But Bitcoin has held up better than everyone expected, to be honest. And some people are even becoming positive, optimistic about Bitcoin's performance this year. Rather than being bearish, they are turning bullish because of that. And definitely, holding at these levels during this macro turbulence suggests some underlying strength. And it's a very good argument. It's showing that big players are accumulating every single dip. That's very important. On the other side, we see the indicator here. The technical indicator is showing us something different. Something that has consistently repeated over the past months and has been consistently happening. It's been accurate. So whether that's coming or no, this indicator is actually measuring the real buying and selling behaviors of the markets. And right now what it's showing us is that it is reflecting a shift towards bearish momentum that is coming up in the next couple of weeks and months. But of course, both sides could be true, both sides could be right, because the markets are complex. They are not so simple. We just need to understand the data, and we need to make decisions based on what we see, what the data shows us, rather than emotions. So that's on Bitcoin. Which altcoins would recover? Now we are getting to the interesting part, the altcoins. That's on Bitcoin's chart. I just wanted to show you that and to warn you that in the next couple of weeks or months, we are likely going to see Bitcoin at 50K. No guarantee. This is what the technical analysis and the data is showing us. Now, let's go to the altcoins. I made a couple of changes to my portfolio recently. I had a gaming project which I got rid of. The long-term projects you can see on this side: Bitcoin, Solana, Caspa, Say, Ethereum, no change, debug. We added 3 new projects to our portfolio. 3 new projects this week, small market cap, new projects with good momentum and potential. These are on Discord. We recently added Aztec, which is a privacy coin, and I personally think that privacy coins would have very good potential. Robotics, privacy, layer 1s, DeFi, real world assets would probably be the most bullish narratives in 2026. In 2026, I was going to say 2025, I'm still on the chart, back at the all-time high. Now 2026. We already made 2x with Aster. We took some profits. Aster, we added when it was first released last year, made 3x. We still bought some more because of they had mainnet launch back early in March. For this reason, we added more Aster. But we already made 4x, 3, I would have to check whether 3 or 4x, but definitely we made some good profits on Discord. 2x with Aztec, and we added 3 more gems this week. If you guys want to join Discord, if you wish to join, I don't share those here because they're exclusive for the Discord community, but also they are short-term picks. We are not aiming to hold those for the longer term. So if I tell you to go and buy now, maybe tomorrow I would have sold those. So to be up to date with the moves, you really need to follow probably on Discord. That's the best place. If you want to join, you don't only get the picks, of course, you also get to see news in real time. You don't have to go and search anywhere else. All the news come to our Discord community, my portfolio, my watch list, some educational content for beginners, and also exclusive content, weekly trading strategies. If you want to join, you would find links in the description. That's on. So let's talk about I already shared with you the portfolio picks. So now let's see what's in the comments now. Which altcoins would recover? Which altcoins? Definitely those that you see here on the list. These are projects that would recover. And I see all the picks on CoinMarketCap. If you sort them by market cap, the top 10 would definitely be projects, not only the top 10, the top 100 would definitely be projects that recover. Whether they reach new all-time high, I don't guarantee for all of them. But those that are in top 10 in particular, those would probably reach, high probability that they would reach new all-time highs. Solana, XRP, BNB, those would do well. Even Ethereum. Can we see a fourth leg down? Oh, it is possible. And why? Because as I keep saying every time, the impact of the war would be seen in months' time. And we are probably going to, depends on what the US strategy is, how long the war would go for. There are a lot of unknown factors here that have a major impact on this. But it is possible to see that. It is possible. Not so likely, but there is, of course, I would always leave a door. Always there is a chance for it to happen. No more analysis for me. Waiting Bitcoin 53k to start DCA. Between now, to be honest, from 65 to 50k is a very good accumulation range. Don't wait for Bitcoin to go to 53k in particular. Why? Because you might not see this happening really. If I just open the chart, I'm not saying that it's not possible, we would see it, but why wait? You never know. Maybe something will happen immediately. US for some reason will decide printing money today, cheap money. I don't think this would happen because of inflation and other reasons, but I'm just giving you some kind of hypothetical reason. Rather than waiting, the best strategy is DCA. Look at Michael Saylor. You can go and watch my video I made yesterday. They have been buying consistently, even at the top, because nobody can predict the markets 100%. Waiting for 53K is very risky. It might be life changing, but at the same time, you might be sidelined. So, better to DCA. Buy now a little bit and reserve big portion of your cash for later on if you wish. But at least you're in the game, you're part of it. Kite. Yes, Kite seemed like an interesting project to me. So the chart looks very good, as you can see. So I've added this on my watch list to explore, to research, and potentially I might be. It's the first AI payment blockchain. So that's something I would definitely look into, but it's just out there hypothetical on my watch list. I'm going to be adding an AI project, whether that's Tao, Render, Fetch AI, or something else near. I'm still to decide. Tao has been doing extremely well, very well. But markets don't just move parabolic, they just don't go like this. So I'm waiting for that pullback on Tao, and I would enter on some AI project. There is a lot of hype around all the AI projects right now, but Tao has been doing extremely well. Add this, the innovation game. I don't know which project that is, TIG. I think gaming is not performing well anymore. I'm even questioning if I should consider gaming in my portfolio for the upcoming bull cycle or altcoin season. I don't think gaming has, just because they're more, it has to be something first that retail investors find interesting. There is hype about it. Look at meme coins, they're pure example. They don't do anything, no utility, but they are cool. They create this sense of belonging, culture. People, they want to belong to some kind of group. Gaming doesn't have this. It doesn't provide any service, no kind of the deep utility that, for example, institutions would be looking for, not the hype that retail investors are looking for. So to be honest, I'm a little bit disappointed by the gaming sector at this stage. Also, it's not listed anywhere. It's on base, but how long has it been? Since 2024. I mean, it could have had at least at least makes some of the tier 2 exchanges, but it clearly doesn't, and it's a micro cap. Be careful with that one. I don't recommend it. It's high risk, probably high reward, but not for me at this stage. The innovation game, okay. TIG. But if you have conviction in it, if you know something about it, cool. You can go ahead. Facts. Getting sidelined hurts more. Indeed. A lot of people are getting sidelined on Caspa. Caspa is doing very well. Healthy retracement over here, and now it's going to continue its bullish momentum. It's actually doing its own thing. It's not following the rest of the market. If you don't have Caspa, very good project to look into. It has gone back to 1 billion market cap, finally. Maybe. Kids are getting games and moving to trading. Yes, I saw some kind of kids on TikTok trading. Trading on TikTok as well. Is this real or AI? It's becoming difficult to differentiate nowadays between what's AI and what's real, honestly. Oh, it's not a gaming. Oh, I thought you said gaming, the innovation game. I'm sorry. Algorithms through global. Okay. Oh, you meant that the innovation game. For some reason, I read that it's a gaming project. If it's AI, then it's probably good. But again, as I said, some of the simple things, and take that, guys, as a lesson now while you're here, how I research projects. I don't have to spend hours researching a project. I can spend 5 minutes and tell you if this project has the potential. Am I willing to take the risk or no? And I'll tell you now the simple 4 or 5 things that I'm looking for. And first of all, looking at the chart. The chart seems bottomed out a little bit, dead, to be honest. If you see at the downwards momentum, it's been going only down this trend line. If there are signals to break above that, I don't know. I have to go further down, further deeper to research. But at this stage, as you can see, clear downtrend. It's failing to make new highs. It's all constantly printing lower highs and lower lows. Then the second thing is the market cap. $3.94 million market cap is very low. That's a micro cap, which means the project will be very volatile. Up, down very quickly. And that's big risk. Then I'm checking the age of the project. It's on the market since 2024. Okay, fairly new project. But it's been around for 2 years, let's say, roughly. For 2 years, it has not got any proper tier 2 exchange listings like Mexi, KuCoin, Bybit, BitGet. Those are the simple ones that they list you very easily as a project. There are no that much criteria. Just some small amount of money and you're listed. It doesn't have that. Then the other thing that I would be looking for is, we said small market cap, high risk. It's on base, cool. The tokenomics, max supply, total supply. It's very scarce, a very small percentage, like 1/3, no, less than that. Yeah, actually 1/3, around 1/3 of the supply is in circulation. And I will not dive deeper into the holders, but then I would go and see what is you can see the first wallets are having pretty big percentage of the coins in circulation. So I would be mindful of this. Overall, if you want to, have something high risk, high reward, and if Bitcoin drops further down, as we talked about earlier, Bitcoin going down to 50K in the next couple of months, weeks, means this project going further down. And if Bitcoin drops 10%, expect this project to go down by 30%, probably. It's already down 92%. Just, sharing how I quickly research. So when I look at it, maybe I can treat it as a meme coin if I wanted to try my luck at some stage. Let's see if we've got any comments. Anyone wants to share anything, any thoughts about Bitcoin, the war, any altcoin? If no, we'll stop here and we'll be back again on Thursday. Another live stream will be on Thursday. In the meantime, if you have any questions, just drop them under any of the videos or under this live stream and I'll pick them up next time. If you guys have no questions or no comments now. Oh, Banana, you're also here. You've been very quiet. Banana Zone. Are you Earl Powell's son by any chance? Oh, Banana Zone. It will come at some stage at some point, you know. This Banana Zone that he's been talking about since. I like him. He's very good, very bright, very smart. But this Banana Zone never comes so far. Thank you. You're welcome, Country Life. Thanks for being here. For those who missed, guys, just watched the start of the live stream. We talked about a couple of charts and where we are going and what the historical indicators and patterns are telling us. In a nutshell, they're telling us Bitcoin to 50K. I hope you would find this analysis and you can learn and use this on your own. You don't have to rely on me or anyone else if you learn how to read this indicator, the MACD. I've been learning. I'm RuPaul. Are you? Well, I'm gonna be famous soon having a RuPaul here. Okay. Well, thanks, guys. Thank you for your time. Thanks for being here. And I'll see you again on Thursday. Thank you.